For any of our viewers who are watching, money is a big topic on many of our minds, especially as we move towards retirement. And you're in luck because we're starting a new show today. We're going to welcome you into Lowcountry Money Talk. I'm your host, Jessa Jeremiah, and we have the expert here for you, going to be bringing us lots of great information. Phil Bloyd is here with Revolutionary Financial Group. Nice to see you.
Thanks, Jess. Glad to be here and get this show started.
Boy, we have a lot to chat about. This is our first episode. The thing I want to do first, though, for our viewers who are here is we really need to get to know you, Phil, and a little bit about how you got into the industry. Talk to us about that.
Sure. I don't think too many people, Jessa, grow up, when you're growing up as a child, you think, I'm going to be a policeman or a firefighter or military or whatever. They don't wake up and say, I'm going to be an investment advisor. I'm going to start my own firm. So I wasn't into that. I was more military oriented. So my introduction to the Lowcountry was right here at Paris Island. So at 18, I had just turned 18 a few days, and I spent the 4th of July in a hotel room waiting for my recruiter to pick me up, and then he sent me over here to Paris Island. And it was in the summer. No one told me how hot it is in the Lowcountry in the summer. So I was over here on Paris Island July, August, and September. I think I still have a suntan around my head, from where my head was shaven. But that's the Lowcountry. That was about 1983. And shortly after that, I was stationed over here in Beaufort, South Carolina. So from 83 to 87, I fell in love with the Lowcountry. And fortunately, I was able to, buy a home here about 18 years ago. So.
And as more and more people come to the area and retire, it is good that you're in a unique position to be somebody who has been here for, a longer period of time. You've seen the evolution of what's happening here in Beaufort County and, of course, what's happening in money. So let's talk a little bit more about that, about Revolutionary Financial Group and, how things are going.
Well, I cut my teeth in the financial business starting in 1992. So it'll soon be 30 years.
Wow.
Time gets by. I don't feel that old every day, but some days I do.
Congratulations, by the way. That's quite the milestone.
So almost 3 decades. So I had to work my way up. I started, I'm from Louisville, Kentucky. So I started there in some firms just, right off the street in the basic learning and going to the schools and all that stuff, the licensing, securities licensing and life insurance. You have to have those licenses as well. I went into mid-level management around 1995, and that's where I had to babysit people, grown people. And then you teach them, this is how you do this is how you do that. So you get them all going. And then by 98, I moved into upper level management, and I was working for some large Midwestern firms. And by that time, I had 20 some people or so that I had to keep up with. And you talk about stressful.
Yeah, a little bit.
Right. So I was recruiting and training new advisors. I was doing forums across the country, speaking engagements, different things. So I started my own firm and said, hey, I'm tired of trying to jam a square peg into a round hole. Because I work with retirees, they have special needs.
Yes.
And when I'm working for this Midwestern firm, they're like, well, this is what you're gonna do. And I'm like, well, I'm working with this retiree and I think they need something else. And they're like, no, we don't do that. Right. So I tailored my business around the actual needs of the client. And that's how I started.
Imagine that, right?
Hey, it's unique.
It's working well for you. It's working well for your clients. We have a minute before we're going to head to break here, but let's touch on that a little bit. Who are your clients? Obviously, you're talking about retirees. What kinds of folks are you seeing in your office? Okay,
so usually our average client will be 70 years old or older, sometimes as young as 59, but in general, on average, about 70 years old. When I first started in the business, here I am, a young 28-year-old, 27-year-old person, and I'm working with retirees, and they're like, well, what could you possibly know? And now they're like, well, what happens if something happens to you? Then I have to introduce my son as the contingent plan and all these things. But we work with 70-year-olds, usually higher net worth type folks. They've moved here recently or they're retired, and we have to go over different things that they're going to be facing with their retirement.
Wow, well, we're going to dive into some more issues facing retirees, of course, as we unfold this season. We're going to talk a little bit about what you can expect this season on Lowcountry Money Talk, and here's a teaser for you. It's mostly money.
Yeah.
But we'll talk about why it's different when we come back. We'll be right back. Welcome back into Lowcountry Money Talk. If you're just tuning in, we are kicking off our first show today, and boy, we're getting to know Philip Bloyd, of course, with Revolutionary Financial Group. We've got a lot of background information on you so far, although I have a feeling we could talk a lot longer about that.
Yeah.
I want our viewers to know, though, a little bit about Revolutionary Financial Group as we, sort of kick off this first episode, and really what sets your company apart, because you talked about individualization.
Right.
That's key.
So we kind of got ahead of the game. I always try to see what's ahead of us instead of what's behind us. So as I saw, the in the Midwestern companies where you're recruiting and training and all this kind of things, I said this whole dynamic's going to shift eventually, and it did. So the way I arranged the company, Revolutionary Financial Group. A group is more than one usually, right? So we have two companies there. One is Revolutionary Wealth Management Corporation. This is a registered investment advisory firm, and this is based upon fee-based asset management. So in this company, we will manage assets and charge a fee based upon how much we're managing. Then when we do other planning, we need things such as insurance. Any big advanced marketing cases, you're going to need some type of insurance products and this and that. So we have one, this is very original, PT Bloyd and Associates Incorporated.
There you go. That's a mouthful.
that's the insurance agency part of Revolutionary Financial Group. So we basically combined the two where that we can offer everything that we think that a client may need in their retirement.
And that's brilliant because you know what, they're so interconnected, right? I mean, what your portfolio looks like, what your family setup looks like, and then your needs on the insurance side, of course, are really, integrated. So having a company that can incorporate those things into, one discussion and under one roof is really great. I think for our viewers watching, we can all agree that makes perfect sense. Let's talk a little bit more about the show. So this is going to be a fun show ahead. We're talking money, but we're really going to relate it to our viewers at home. Not just, money and stocks and trading, but what's happening, right?
Sure. Well, we can always turn on any of the media outlets and see the streaming under the screen, the stock ticker tape. I think today, more so than in the past, it's so emotional. Like today the market is way up and you should be in there, and tomorrow it's down so many points and it's doom and gloom, and we want to be more strategic than that. Yeah. So if we look at strategic planning, there's more to retirement than how much do I have in stocks or this or that or whatever type. It's when I take my money out, how is it taxed? How did I arrange my money? Am I going to pay capital gains? Am I going to pay income tax on this money? How does that work? And how much will I lose to management and expenses, internal, external expenses, all these things? And we want to talk about the topics of the day. Absolutely. What is the topic of the day? Well, it could be inflation, or it could be required minimum distribution. There was changes in these over the last several years. So we're going to have like a current events type. This is what you're hearing on TV today. How do we address it as a retiree? How can I plan for this? I've always felt with my military background is that if we're stressed out, if we set plans ahead of time, and we're like, oh yeah, I already have a plan for this, it kind of relieves the stress so that we can go out and enjoy retirement.
Absolutely.
We saved all of these funds so that we can move to Hilton Head or the Lowcountry, Bluffton, wherever, and enjoy them. So why am I still all stressed out about these things?
Right. And one of the things you said that is so key is we do tend to be so keyed into the gains and the losses. And that's where the expert comes in to make sure we've got our eye on the big picture here. And what is our long-term goal? What's it going to cost us if we do decide to exit? And all those things that come into play. So we've got a lot of topics we're going to cover throughout the season. You talked about one on the docket for current events. Of course, inflation is one. We're going to dive into just a little bit as we return from the break. Phil Bloyd, again, is with Revolutionary Financial Group. You're watching Lowcountry Money Talk. We have more coming up next. Welcome back in. You're watching Lowcountry Money Talk. We're with Phil Bloyd with Revolutionary Financial Group, learning a lot about the industry, Phil's background, of course, and what makes this company so different, giving you some teasers to the show that is coming ahead this season. Phil, I'm so glad we're doing this. This is great.
We need it in this area. The thing is, what I've tried to do with Revolutionary Financial Group is be more of a client-based, one-on-one. We unfortunately can't take everyone in, so it's more like a personal one-on-one type wealth strategy, to where a lot of people may be used to big firms, a lot of noise, people running all around. I want more of that relationship. So when we develop a plan together, and believe me, people get nerves and they'll call, hey, are we still okay in this? And I'm like, remember we talked about this? And oh yeah, that's right, I feel better. So a lot of times I'm there just to kind of ease your nerves a bit.
Absolutely.
So some of the things we're dealing with today, big hot topics, so current events, inflation.
It's a big one.
Right. So you can't turn on the news, you can't go buy a few pounds of hamburger or fill up a tank of gas without saying, wow, this inflation. It's scary for retirees because when I'm retired, I've already accumulated most of my wealth. And I'm not contributing to retirement anymore.
Right.
So whatever I've contributed has to last 20, 30, maybe even longer. My oldest female client is like 95.
Wow. And see, that's where you come in with that individual relationship. Sometimes we just need you, Phil, to talk us off the ledge when things are looking a little bit dicey, when we're looking at things like inflation. So what's going on with inflation? Because we are worried about that as we're seeing prices rise, and that nest egg isn't necessarily getting more contributions, to your point.
Well, you may be concerned and think, well, I need to take more out of my retirement plan. And let's say my retirement plan is now in an IRA or 401k. So when I take more out of that retirement plan, I have to pay more taxes too. So I have to take out more to cover the taxes, and then I have to take out more to buy, gas, food, all these other things. So the Consumer Price Index came out, I believe it was September through September, at 5.4. So we say, okay, 5.4 inflation, then the Social Security cost of living is going up 5.9, but gasoline is 50% more.
And that's where the heart rates start going up at extreme rates, right?
So, I've accumulated my wealth. Before, if I was in a bad market or inflationary, I'm still contributing. I have money coming out of each paycheck, maybe going into my 401k, dollar cost averaging. So when the stock market's up, maybe I'm buying a little high. When it's down, that payday may be a little low, and it kind of irons out. Well, that's not going on anymore. So whatever I have saved has to last, and it causes me concern when everything's going up.
Right.
And then I have to pay more. And it's like, is the market going to keep up with this inflation? How long is it going to be? What does transitory mean? What does tapering mean? So we're learning a few terminologies that maybe we're not familiar with.
Absolutely. And, as a retiree, these issues really can really stress folks out. And you need to come in and kind of just be an educator. That's part of what this show is about, is just educating the public on what some of these terms mean. What does that mean for my financial picture? If I do need those friends to stretch out a little bit as inflation rises, just letting people know, some of these important things that are coming up and what you can do to help and what our viewers can do to help.
Sure.
We'll dive more into topics like that on a little bit deeper basis. We're kind of just scratching the surface today. One thing I want to talk to you today about, Phil, is required minimum distributions. We don't have a lot of time for that right now, but give us just a teaser as we head to break on, something we can talk about
Well,
there.
sure. If you're 72, you have to take a required minimum distribution from your IRA. If you don't, there's a 50% penalty. And I promise you, you only have that penalty take place once because it will burn an everlasting memory into your brain. Okay, so we'll talk about that.
And speaking of everlasting memory, we'll let you sit with that memory for the couple minutes that we're on commercial, but don't worry, we've got more coming up after the break here on Lowcountry Money Talk. Stick with us. Hey, nice to see you, and thanks for sticking with us here on Lowcountry Money Talk. And if you're just tuning in, we have an expert here at the table. In fact, an expert so much so I wish we could record the breaks because we learn a lot on the breaks too. Phil Bloyd is with Revolutionary Financial Group. We're talking, of course, money. We're talking about what you do, and we're touching on really just scratching the surface here on some topics. But thanks for being here today.
Hey, thanks for having me.
So before the break, in case you missed it, we talked a little bit about inflation. And, as we go along, this is our very first episode for those of you who are just tuning in. As we go along here and throughout the season of Lowcountry Money Talk, we're going to deep dive into some fun topics.
Sure.
Maybe some nerve-wracking topics, right, as we talk money.
They could be.
Yeah, it depends. And of course, make sure we're educating the public a little bit here. And that's where you come in, Phil. You're doing the educating. I'm really just asking the questions. But we gave you a little teaser before the break about required minimum distributions.
Right.
You made us a little nervous. Let's talk a little bit about that and what we look forward to here.
Right. So required minimum distribution, if I'm 72, it used to be 70 and a half. We were talking about those half birthdays earlier.
Indeed.
Right? Yeah. So the Secure Act changed the age to 72. So now we can get rid of that half. So if I'm 72, typically I'm going to have to take a certain amount out of my qualified tax plan. So it could be a 401k, it could be a traditional IRA. So there's a divisor that the government uses. It's based upon your life expectancy. Okay.
Ooh, okay.
So, or you can, and they have a multiplier. So it depends on what you like. But you have to take a certain amount out. The reason we bring this up in November, the last quarter of the year, is usually where we see most people take their required minimum distribution.
Yeah, it's a timely topic, certainly. So let's talk a little bit more about that, and just sort of elaborate on this distribution. Why this time of year, and what people should expect and do.
Right. Well, Jessa, we're procrastinators. Okay, so it has to be out by December 31st. So we're getting there, just like we have to file our tax return by April 15th. So if we do not take this required minimum amount, there's a 50% IRS penalty.
Wow.
So if I was required to take out, say, $20,000 and I missed it, the penalty would be 10.
Wow, that's more than significant. Obviously, that's something that we don't want to miss that mark. And if you're like some people I know, you are a procrastinator. Sometimes we go right up to that edge.
Right.
So, is there any advantage to really being ahead of it? Does it matter where in the timeline of the year we are?
It could, based upon how your assets are arranged. If you see, because the value that determines how much you have to take out is based upon December 31st last year, and your age December 31st this year. So let's just say that I had a lot of equity investments or stocks in my account, and the market was way up December 31st last year, and come around April, it went down 20%. It didn't, but let's just say it did.
Right.
Well, wow, I'm going to say, well, I'm just going to wait because I have till December. But what if it went down another 10%?
Sure.
And it never came back. And I'm going to wait and wait and wait till I can't wait any longer. And then I'm going to have to take a higher ratio out of a lower number, which can cause a lot of problems because I have to withdraw the taxes. So people say, well, I can reinvest it. Yeah, minus the taxes.
Right.
But the reason most people put off till the end of the year is they just really don't want the money. they don't need it and they don't want to pay taxes on it. So they
Sure.
push it out as far as possible.
Absolutely. So a lot of considerations there, and that's where having the expert on your side is key. I'm going to put you under the gun here. We have 49 seconds.
Okay.
Can you give
Sure.
us some teasers into
Sure.
what we can expect throughout the season?
Let's go over some things. So what we want to do is go over some topics that I see every day in my practice as people come in. So one thing we'll talk about, the bulls and the bears. How does a bull market work? How does a bear market work? How can I prepare my IRA for both markets? That's really important because we just had a little bit of that discussion. And what do the topics bull and bear mean? We'll talk about Roth IRAs, Roth 401ks. What's the difference between the two? How should I have my beneficiaries on my IRA plans? All these things. And then we may even have some special guests. You never know.
I think that
Talk
would be
about
lovely.
estate planning.
Although today you have been a very special guest. In fact, it's been a pleasure getting to know you more and helping to educate our viewers. We got a lot to come on the season. Lowcountry
Look
Money
forward to
Talk.
it.
Phil Bloyd, we're going to have some fun.
right.
Thanks for watching.
Have a great weekend.